Welcome to the deep dive.
Just a month ago, it really felt like the stock market had, well, fallen off a cliff. Pessimism was just everywhere.
Oh, absolutely. Yeah.
But you fast forward to today, and wow, the picture is completely different. We've seen this uh, really significant rally.
It's remarkably swift change, isn't it? We've gone from everyone expecting more drops to this surprisingly strong surge in, well, not much time at all.
And that's exactly what we're going to unpack for you today. We really want to understand what's driving this new market strength, maybe pinpoint the new leaders emerging,
Yeah.
and specifically take a hard look at this pretty notable surge in mid-cap companies.
Right.
It feels almost like a natural cycle, doesn't it? You think about after a big disruption, like a forest fire often started by us humans,
Like,
by the way, you get new growth springing up from the ashes.
that's a great analogy.
Yeah.
And yeah, we see something similar in the markets, These big downturns, they often kind of clear the path for new leadership.
Yeah.
It creates space for different sectors, different companies to step up. Exactly. So to really get a handle on this pattern, this market behavior, and figure out where those new opportunities might be, we're going to follow the money flows.
Mm-hmm.
It's all about tracking where the big capital is actually moving.
Mm.
And our main goal today, our mission, is to identify the biggest beneficiary of this capital shift after the recent downturn.
Okay.
And it's happening, maybe surprisingly, in a place that might be flying under your radar,
Mm-hmm.
mid-cap companies. It really looks like maybe an under-the-surface bull market is starting to form.
That's right. I mean, if you think back exactly 1 month, May 8th, 2025, the market was deep in bear territory.
Oh, yeah.
We saw a volatility spike, huge drops in the S&P 500. The feeling out there was, well, the source material called it pure panic.
Pure panic sounds about right. You could almost taste it in the trading.
Yeah.
But now, it's like a total reset. We're in what some are calling a face-melting rally.
Yeah.
The S&P 500 is up, 13%? NASDAQ even more, like 16%? And as we mentioned, small caps, mid caps, they're showing big double-digit gains too. So
Yeah.
what flipped the switch so suddenly?
Well, the main driver, based on our analysis, seems to be that the really intense selling pressure, the capitulation, it just stopped.
Yeah.
That huge wave of selling we saw, it just dried up.
Yeah, that makes sense. Once most of the sellers are out, the path of least resistance, well, it's often upwards, right? At least for a while.
Exactly.
And the source material points to some interesting parallels with past corrections.
Mhm.
I think it mentioned the COVID crash in 2020
Hmm.
and late 2018.
Yes, exactly. And what's really insightful there is the pattern that keeps repeating.
Okay.
You see this sharp sell-off driven by that panic selling, that capitulation we talked about.
Right.
Then you get a phase where new money starts coming in, absorbing those outflows, finding value.
Uh-huh.
And then the final stage, which our sources think is likely coming but maybe hasn't fully kicked in yet, is forced buying.
Forced buying. Explain that a bit.
That's when investors who were sitting on the sidelines, maybe waiting for things to settle, they start seeing prices rise and feel like they have to jump in or they'll miss out.
So-
FOMO, basically.
Ah, okay. Fear of missing out buying. Got it.
Yeah. And the charts in the source document, pages 3 to 5, they actually show this sequence playing out visually in those past events and what looks like the current situation, too.
It really is like a familiar script, just different players sometimes.
Okay, so with this big rebound as the backdrop, let's really focus on where the new money is going. You mentioned mid-caps being strong. What do the actual flow numbers show?
Well, if you break down the equity flows over the past month by market cap, there's a very clear trend. Mid-cap stocks, and we're talking companies between, say, $5 billion and $300 billion market cap here, they are the only group showing net positive inflows.
The only group. Seriously.
Yeah. The numbers are something like 306 individual company buys versus only 175 sells in that category.
Wow, that's a really stark difference. And it's individual companies, not just index funds moving around.
Exactly. The source emphasizes that. It signifies a real significant flow of capital into these specific mid-sized businesses, the ones maybe not always in the headlines. So what's making mid-cap so attractive right now? Why the sudden interest?
That's the key question, right? And our analysis suggests this. Risk-on move into mid-caps makes more sense when you see just how beaten down they were before this rally.
Go.
Think about this. On April 7th, just a month ago, only 12% of the companies in the S&P Mid-Cap 400 index were trading above their 200-day moving average.
Only 12%. That's incredibly low. That average is a big long-term trend indicator, right?
It is. So that tiny percentage, it screamed deep pessimism. Like these stocks were just completely washed out.
So basically they got hammered, maybe unfairly sold off in the panic.
Yeah.
And the source even mentions a signal study predicting this kind of rebound after such weak breadth. I think it says something like mid-caps rip after ultra-weak breadth. Extreme downs lead to extreme ups.
Exactly that. It's like that coiled spring analogy. After being pushed down so hard for so long, the conditions were just perfect for a snapback, potentially a really strong one.
And the money flows seem to confirm that the big players, the institutions, are seeing that value now.
The data strongly suggests that, yes, they're moving in.
Okay, so we know money's flowing into mid-caps, but mid-caps is still a pretty big bucket. How do we narrow it down? How do we find specific companies leading the charge?
Right. So this is where the analysis gets more granular. It shifts to finding those best-of-breed companies within the mid-cap space, the ones showing the strongest momentum, the ones attracting the most serious institutional money.
Quality names.
Precisely. The source talks about a weekly report they use, highlighting the top 20 inflows. These are essentially the stocks where institutions are showing the highest conviction through their buying.
Okay, the ones that big funds are really loading up on. And this kind of approach, focusing on those top inflow stocks, it's worked before, hasn't it? I think the source mentioned some big wins.
It did. It pointed to finding Supermicrocomputer, SMCI, back in summer 2022, and even NVIDIA, NVDA, way back in summer 2015, well before they became household names and saw those huge runs.
Right, identifying them early based on that institutional buying signal.
Exactly. The goal is to catch these potential winners early, when those signals of heavy accumulation first appear, because that often comes before the really big price moves.
Makes sense. Does the source give a current mid-cap example?
It does. It highlights Tradeweb Markets, ticker TW.
Tradeweb. Okay, they're an electronic trading firm, right? What makes them a good illustration here?
Well, first, they're benefiting from things happening right now, like longer trading hours, more types of assets being traded electronically. And yeah, their sales and earnings growth look solid.
Oh, okay.
But the key thing, connecting back to our theme, are the outlier signals. Tradeweb has apparently shown up multiple times since 2023 as a top-ranked stock based on those institutional inflow metrics. Page 9 in the source details this.
Ah, so consistent, strong buying from the big players over time. That's the pattern.
That's the pattern. It's that signal of underlying strengths and potential that the institutions are latching onto.
So basically, the same kind of institutional thumbs up that flagged SMCI and NVIDIA early on is now appearing in certain mid-caps, like Tradeweb.
Precisely. The same signals are flashing now in this often overlooked mid-cap sector. It really strongly suggests that, yeah, a new wave of market leadership is starting to emerge right there.
Okay, so let's crystallize this. The big takeaway for you listening is pretty clear. There's new leadership emerging, and mid-cap stocks seem to be right at the heart of it this time. So what should you do with that information?
Well, our analysis really points towards paying attention now. Don't wait for the mainstream headlines to catch up.
Yeah.
By the time it's all over the news, a lot of the move might have already happened. You know the saying, don't wait for the media to blow the bull whistle. By then, the train will have left the station.
That's a good point. So the actionable idea, really, for your own research is to start looking where that big institutional money, the big money, is actually flowing now. Maybe look beyond the usual mega-cap suspects.
Exactly. And while they don't list the specific top 20 names here that seems to be proprietary, the source does give a little hint. It mentions 5 growth-type companies in tech, healthcare, and industrials that hit that list recently.
Okay, so tech, healthcare, industrials within mid-caps might be interesting areas to explore further.
It could give you a starting point, yeah. Places to dig deeper within that mid-cap universe.
So the message seems to be, as you're thinking about where the market might go next, don't just focus on the giants. Keep a sharp eye on those mid-sized companies that are showing signs of attracting serious institutional interest. That might be where some really interesting opportunities are brewing.
Which leads to a final thought, maybe something for you to chew on. What other, perhaps less obvious sectors or types of mid-cap companies might be showing these early signals, these flickers of institutional interest? And, you know, what wider economic shifts or market trends could possibly power their growth over the next few months? Definitely something worth exploring beyond the main headlines.